Whew. Good morning, Lagos. Good morning, everyone. This is Follow the Money, brought to you by Nairametrics. Um, what a week it was! This is going to be a beautiful week, though. I like as the song was rolling. I'm saying to myself, man, it's just got to be a lovely week this week compared to the week before. Last week was crazy for the stock market globally. In fact, for markets globally, it was just wild, wild west out there. I hope you were not one of those who lost a lot of money. I mean, when I mean lost money, portfolio wise, last week I was one of them. So, if you are, then you're in good company, aren't you? It was such a bloody week because of Trump tariffs, which I tried to explain last week when I was here in the studio. And of course, if you miss any part of it, you can always go back to our channel, Nairametrics TV, and you can catch previous episodes of Follow the Money, this show, and several other shows as well. By the way, we have the latest episode of our Drinks and Mics podcast right there on our YouTube channel. In case you didn't know, in case you missed it, you can always go back to watch as well. What a week it was globally, like I mentioned. Stock markets did take a huge beating last week. Even though towards the end of the week it kind of closed a lot better, but the early, the losses that we saw on Monday, Tuesday were just mad. I mean, if I could use that word, it was just crazy. And so Nigeria wasn't excluded at all, because the Nigerian All Share Index closed the week ending April 11th in deep red, falling by 948.5 points to settle at 104,563. So it looks like we're gradually coming down to that 100,000 floor, which I don't want. I don't always want us to go below 100,000, because once you go below 100,000, then it's almost as if we're now in deep red, stock market wise. Anyway, that's 3 straight weeks now of decline, and now below that 105,000 level. Anyways, so stocks have lost 3 weeks straight. So even before Donald Trump, Nigerian stocks have been taking a beating. Now, this defies logic, right? Yeah, because all week round, or all over the last few weeks, we've seen a lot of companies release results, and the results have been fantastic. Most companies have declared higher profits, higher revenues. Most companies have also declared dividends. So why are we now seeing losses on the exchange? Like, always defies logic sometimes, or how investors kind of like react here in the Nigerian stock market. But there are probably only 50, 60 stocks or so that are actively trading. So perhaps maybe investors just have better use for the money, or are taking profits, like I did mention earlier last week. The market cap did take a hit as well. It dropped 66. It dropped below 66 trillion during the week, to end the week at 65.7 trillion as well. Despite the drop, activity picked up, with trading volume up 77% to 2 billion shares, up from last week's 1.18 billion shares. So what does this kind of mean? I kind of think whenever you see higher volumes of shares being traded and then the share price dropping, that it means there are actually more sellers out there. A lot of people are selling. You would say that when you have more sellers, you have more buyers anyway, but could mean that net you have a lot more people selling and few more people buying, not necessarily the volume of stocks itself. So it looks like it's a selling pressure on stocks. I kind of feel like they're selling so that they can take profits and then come back in. The number of stocks that I have on my watch list today, one particular banking stocks I'm thinking of loading up on. You want to know what that banking stock is? Well, just go to my website, ftm.ng, and I'm gonna be talking about my stock pick there this week. Just one stock that I think that I want to like double down on. I have mentioned it before on the show, but I want to take more positions in it. All right. So in terms of the index itself, the index shed 1.53%, and it was weighed down mostly by some of the fugas. First Holdings was down, Access Corp was down. Those two banking stocks are yet to release their results. They did mention that they would release it by on or before the end of this month, citing regulatory delays as the reason. UBA also fell a little bit during the week. They have released their results already, of course. MTNN as well, which is MTN Nigeria, also pulled markets down. Insurance stocks also got hammered with the index down 4.57% thanks to major losses from Cornerstone, Sovereign Trust, and of course Lasaco. All down by over 12%. Banking stocks did dip, like I mentioned earlier. So apart from Access and UBN and First Oco, ETI also dragged the sector lower. We did see minor losses from consumer goods industry. They dropped 0.61%, oil and gas dropped 0.5%, and industrial goods 0.26%. So it kind of looks like it's a losing spree all around. But hey, look, whenever stocks are down, that's always an opportunity to get back in, especially if the reason why it's down, it's not fundamental. It's not because companies are not doing very well. Companies are doing well. At the end of the day, on the long run, fundamentals always wins when it comes to the stock market. On the long run, fundamentals always win. Always remember that. The short run, it probably might not win, but on the long run, fundamentals always win. Always wins. I beg your pardon. So, in terms of our top losers, we did have a lot of top losers during the week, and amongst them were out to Bisco, May and Baker, Howland and McCall, all dropped over 10% during the week. But the top four gainers would be CAP, one of my favorite stocks. I haven't had that stock in a while though. Should look into it again. Dropped 11.7%, so that looks like an interesting buying opportunity. Could be because of dividends. I'm not so sure, but it did lose 11.7%. Sovereign Trust also down 15%. Cornerstone Insurance down 15%, and then Royal Exchange down 20.79%. So the insurance stocks led the losing spree that we saw last week as investors essentially just offloaded their holdings in those stocks. And then the top gainers, we did have IEI, which is an insurance stock, by the way, livestock feeds in their NGX group. Also one of the top gainers. And then Japol Gold also made gains during the week. And then the top five gainers last week were, of course, Total Energies, gained 9.6%. They had a solid result. I think I kind of mentioned it last week. Yeah, so they had a solid result. So they gained 9.6%. FTN Cocoa up 18.7%. I don't think this stock has ever posted revenue. At least last time I checked, it had zero revenues, all costs. So not sure what investors are seeing here. Why we're seeing an 18.7% jump in its share price. Could you be that someone is about to acquire that company? I don't know, but just wondering why is it up 18.75%? Abbey Mortgage up 29.6%. Union Die Consult up 31%. And guess who the top gainer was last week? Out of the blues, VFD Group up 53.86%. Astonishing. Even I missed that boat. Jeez. 53.86% in 1 week. I really need to double check that number, but that is some solid gain by that financial holding company or financial services holding company last week. Looks like a lot of interesting things going down with that stock, so that's one to pay attention to. Of course, there were a lot of other corporate announcements during the week. Girigu Power became, I think, the first to release its Q1 numbers. Early Flyer Q1 is just finished 2 weeks ago, and they already have their Q1 numbers out. Score and Presco also published their FY result. I'm going to talk about Presco if time permits on the show. And of course, Wema Bank also announced mega plans for its own rights issue. Wema Bank, one of my favorite banking stocks as well. So while trading volume surged, this is just my takeaway, while trading volume surged, bearish sentiments dominated as investors reacted to sell-offs in large cap stocks. I already mentioned some of them that were sold off. So unless we see an ease in macroeconomic pressures, not just in Nigeria, but globally, we could see further downward trends. Again, this is an opportunity to buy. So whenever you see downward trends, it does suggest a buying opportunity. So I don't know what you're seeing, but that is what I see. All right. So that is it for stocks last week. This week, I'm going to be talking a lot about ranking. I'm going to be ranking some companies based on some analysis that the folks at Nairametrics had done. We're going to be looking at the best performing pension funds for the month of March. Now, why is this important? You all have money in the pension industry, so you gotta always check which of your PFAs are doing well and what sort of returns that you're posting, so that you could also be sure that at least your investments have been secured. I'm also going to talk about women that are listed on the exchange. Who are the top? Did I say women that are listed on the exchange? I beg your pardon. Women that own the highest value of shares on the Nigerian exchange. Like, when I mean, like, you have companies listed on the exchange and you have shareholders of those companies. And so some of those shareholders have significant value of shares in those companies. And I'm going to be talking about some of the Amazons of the Nigerian exchange, women who hold major shares in companies, not majority, but at least major shares valued at billions of naira. So you want to stay tuned for that. All right, so we go to the top performing pension funds for the year. So for the month of March. So according to Nairametrics data, there were 16 PFAs average return of 0.85% for the month. That is less than 12% per annum, by the way. And performance is usually done by category. So you have the RSA Fund 4, which is usually for retirees, and then you have RSA Fund 3, which is for people aged between 50 and 60. That fund dropped 0.92%. The one for retirees did 1.15%. It kind of looks like retirees are doing better. And then RSA Fund 2, which is for people under 50, that did 0.69%. And then you have the RSA Fund 1, which is the high risk fund, right? And that fund did 0.58%, and surprisingly, it was the least performing category of the funds for the month of March. And so kind of looks like people are wary of risk, and just probably why so risk rated assets seem to be taking a beating, while the ones that are not, that are risk averse, the ones that are risk averse seem to be doing pretty well from what we see. So who are the top performing PFAs? Well, just to note that when collating the data, there were some PFA numbers that were not publicly available, and so it's nothing we can do. We only work with data that is publicly available. That's what Nairametrics does. By the way, Nairametrics is the research arm of Nairametrics, and so we didn't see data for ARM, we didn't see data for Leadway Pension and Cardinal Stone. So if these are your pension funds administrators, well, we didn't see their data, so they could have outdone the ones we have here, or even done worse. I don't know. But based on the data that we have here, Crusader Sterling Pensions led the way on the average in general with 1.23%, and then NLPC Pension Funds was next with 1.15%, and then Oak Pensions with 1.1%. Right. So in terms of the fund by leaders, NLPC was top when it comes to the high risk fund with 1.58%. Crusader was next with 1.4%, and then Fidelity Pensions 1.19%. So when you're looking at high risk performance for high risk fund, as the RSA fund with the highest risk, these are the ones that did better. So it's called RSA Fund 1. NLPC was tops, and then of course the Fund 2, that's the one for mainstream workers. It was Crusader Sterling that topped that list with 1.13%, and then NLPC now was second with 1.09%, and then Stanbic IBTC was next with 1.05%. Then for the pre-retirees, that's those that are aged between 50 and 60, GT pension managers seem to have outperformed others with 1.2% there, Crusader Sterling 1.13%, and then Fidelity Pensions 1.13%, running up the top three. Now for retirees, looks like the best pension fund for the month of March was Oak Pensions with 1.32%, and then Fidelity Pensions with 1.27%, and Crusader Sterling with 1.24%. Yeah, so that's it. It kind of looks like Crusader Sterling was all the way there. Yeah, they were consistently in the consistently appeared in nearly all the fund categories. NLPC was also kind of like in most of the categories as well, same as Fidelity Pension. You'd always see either of those three in all the categories, but I think Crusader was the only one that was in all categories as well. So these were the best performing pension funds. I don't know. What do you think? Was your pension funds part of those funds that made that list, or were they not? Well, like I mentioned, we didn't get data for some pension funds. So, I mean, like ARM, Leadway, Cardinal Stone, we didn't see them on we couldn't get the publicly available information, so they're not on this list. So maybe we get it in April, and then when we give you April's data in May, we're probably going to see who's the best performing pension funds. All right, so we're going to take a short break, and when we're back, we will look at a few things. Remember I talked about Amazon of the stock market, so we're going to look at that later on the show when we're back on the second half of the show. So be right back. This is Follow the Money, brought to you by Nairametrics. All right, welcome back to Follow the Money, brought to you by Nairametrics. My name is Ugodre, and in case you're just tuning in, we do this every Mondays, 8 to 8:30 on this channel. Of course, you can always check this episode in case you probably want to play back any of my snippets or any past episodes. You just go to our YouTube channel, Follow the Money, and you would see it there. And you've probably seen me on video as well, because this is being recorded live in studio as we speak. All right, so we're going to be spotlighting a staggering figure at the moment in this segment, 2.17 trillion. Yeah, not about the Amazon yet. We're going to get there, but 2.17 trillion. That's the combined foreign exchange losses reported by some of major Nigerian companies in 2024. Some of the biggest companies that released their numbers on the exchange, they did incur a mega 2.17 trillion in forex related losses wiped out of their balance sheet because of FX revaluation in 2024. So remember that we had that revaluation in 2024, and they all took mega losses in 2023. Devaluation in 2023, devaluation in 2024, all led to mega losses for this company. So as much as they had mega losses in 2023, they still had more in 2024. Now, here's what's interesting. These guys combined, from the data we have, did see their revenues up 64% to 13.545 trillion. So they all recorded huge numbers, and some of these companies, some of them, it includes the companies like MTN, Nestle, Dangote Group, that's Dangote Cement, Dangote Sugar, includes Boa Food, Boa Cement, also includes Nigerian Breweries. So some of the largest companies, also, I think it also includes Lafarge as well. So major companies as well. We've got Cadbury in there, and we also got Aradel Holdings, Seplat. They're all in this group of companies that we surveyed, and they all reported this staggering loss. So despite having this increase in revenue, most of them also, their profits fall marginally by 6% to 332 billion. A lot of them did declare losses, like you all know already. So we're just going to go through some of them in detail so that you can know. So for MTN, for example, MTN lost 925 billion on FX alone, which was most of the losses that I recorded last year anyways, and then ended up with a pre-tax loss of 550 billion at the end of the year. So did record mega losses. From what we see from the FX, 61% of that number, of that 925 billion, was realized, and 39 was unrealized. So it means more than half of the losses already realized that they actually did incur that number, while the balance they did not, would still carry it in their books. It's unrealized yet, but you got to account for it. Nestle did 290.7 billion in losses. 80% of that is unrealized, so they haven't actually incurred that number fully. So this is just their estimate, and 80% of it, so 20% is what they have just realized. So we're looking at maybe almost 60 billion or so realized. Dangote Group also did record mega losses when it comes to FX. Dangote Cement did 249 billion by our estimate. Dangote Sugar 208.9 billion. So combined, these guys were doing over 450 billion in losses as well. Boa Boa Foods did 173 billion, Boa Cement 92 billion. In losses, FX losses, that is. But Boa still did healthy 17% profit margin as well. Dangote Sugar did suffer a lot because of these losses, because their losses basically ballooned. Nigerian breweries did FX losses of 157 billion. But still managed to post like a little bit of pre-tax profit in Q4. So it looks like maybe things are turning the corner for them. But remember that it did a pre-tax loss of about 180 something billion or so. And then other companies that also suffered a lot of losses were Cadbury. Cadbury did suffer mega losses. FX loss dropped 28.3 billion. So even though it was a 24% drop because they did incur higher FX losses the year before, Lafarge did net FX loss of 24.3 billion. Despite a small unrealized FX gain, losses did grow. And then Aradel, that's an oil and gas company, recorded 19.6 billion in FX losses. So these losses weren't just numbers. They basically wiped out profit growth for a lot of these companies. And so when decisions like this are taken, they do have pure implications. And as you can see, even companies with growing revenues like MTN, Nestle, Boa, they didn't escape it at all. They did face the currency drag, and so that is that's that information. If you want to read more about it, you can go to our Nairametrics website and you see that story. FX losses by mega companies in Nigeria, and it was quite massive. The amount of losses that we saw. All right, so we go right into women of the NGX, Amazon of the NGX. So. We want to shift spotlight to charts from charts and tickers to the powerful women that are leading the Nigerian Stock Exchange in terms of their market valuation. Like, that's the value of shares that they own in some of these companies. Doesn't necessarily mean that's their entire net asset value. These people are probably worth more than this, but always important to know that because for a lot of women folks who think maybe the stock market is not for them, you have Amazon strong women who are in the stock market. Like, these are women who are essentially controlling a lot of companies on the exchange. And we're going to start with number 6 on our list, Neka Onyali Ikpe. She is the GMD of Fidelity Bank, right? Fidelity Bank is one of those banks that are knocking on the door of Tier 1, likely to get into that Tier 1 league. In fact, it's giving me concerns because if Fidelity gets into Tier 1 league, so what are we going to do with our Fugas? How are we going to, is it going to be Fugas or what? I don't know, but it looks like they're knocking on that list. And so we did check some of her numbers. All these things you can verify from financial statements of these companies. And as the MD CEO of Fidelity, she owns over 94.6 million shares valued at 1.8 billion naira, right? That's the value of her shares. And Fidelity did declare a dividend of 2 naira 30 per share, so she's likely going to be getting about 200 million thereabout in dividend. So she is a solid investor in that bank as much as she's the GMD CEO. So it's good to see that MD CEOs also have majority stakes or have stake in their banks. And next on our list is Olufunmilola Ayebaye. So she is a shareholder of Fitson. Fitson is one of the top pharmaceutical companies in Nigeria. She's a non-executive director. She's not in any executive capacity at all, and she owns 74.6 million shares in Fitson, making her the second largest individual shareholder. I think the largest shareholder must be her husband, if I'm not mistaken. And her stake is worth 1.3 billion from what we got. Fitson did post 7.5 billion in pre-tax profits, up 27% year on year, and is currently building $100 million plant somewhere in Lekki. Next on our list, which is number 4, is the elegant Adora Umweji, who is the GMD of Zenith Bank. A lot of people in the banking sector don't know who she is, and from what we gather, she owns about 92 million shares as well in one of the most valuable banks in Nigeria. And that 92 million is valued at just over 4.3 billion naira thereabout. And remember, Zenith also did post mega profits. I think they posted the highest profit last year, about 1.2 trillion or so, and did declare a dividend of 5 naira per share. And if going by the number of shares she has in that bank, she's probably going to be getting over 450 million in dividend as well. So this bank, like I said, is valued at over 2 trillion. And so she is the GMD, and so she has a skin in the game. So she also has shares in that mega bank. And next on our list is somebody in the insurance space. Yeah, so she's Joy Teluo. She owns about 320 million shares in NEM Insurance, one of the high-flying insurance companies in Nigeria. And she does also manage 3 other indigenous companies aside, being a stakeholder in NEM Insurance. But her shares is valued at about 4.3 billion from what we see. And so with NEM paying 1 naira dividend, she's likely going to be going with about 320 million or so in dividend payments this year. So also a mega stakeholder on the exchange. You see, women are there. This is top 3, and they hardly get talked about, right? So, and then next on our list, number 2 is probably a name that most of you probably be familiar with, because you probably see her a lot on social media. But she is Awele Vivian Elumelu, Tony Elumelu's wife, and she is the chair of Avon Healthcare, and she owns about 517.7 or so million shares in Transcorp, right? And that share, that everything that she owns is valued at about 22.9 billion by our estimates as at March, and she is on track to get dividend over 500 million naira, in terms of dividend payment. So Transcorp, of course, did post a high pre-tax profit of about 136 billion, up 132% year on year. So she also has a stake in her husband's business. So you see, and her stake, and by sticking with her husband and her husband sticking with her as well, her stake is valued at almost 23 billion. And you gotta see them go side, but you always see them together, and most times on Mr. Elimelu's social media handle on Instagram. And so they do co-invest in a lot of stuff, and you can see that happening. Because number 1 on our list is Abolanle Martel Oko. You heard that name before? Does it ring a bell? You might want to check. She is a director with Wema Bank, and from our estimates, she is the daughter of Sir Kensington Adebutu, which a lot of you might probably know. So, from my estimates, the valuation of the shares that she owns about 7 billion shares, or 32.8% of the bank. I don't know if that's what she owns or if she represents an entity, but as far as we're concerned, it's in her name, so we believe that she owns it. And that shares is valued at about 75 billion naira in total. So, that is our top 5 women on the exchange, top 6 women on the exchange with the highest market value in 2024 March. We're going to be doing this every quarter. We'll figure out who's going to come in, who's going to be out of that list very soon. Sorry, I can't take you through other things I had. I did have Presco's results, and I had Geregu Power, but we're going to be talking about that next week. This has been Flow the Morning, brought to you by Nairametrics. Of course, until we do this again next week, do have a profitable week ahead. Goodbye.